All right, Ken Orange Theory Trader back with another video on trading Forex like a stock trader. So let's get into it. So when we talk about trading the stock market, remember that most retail stock traders, they're forced to only buy stocks because shorting a stock can be very risky and typically requires a margin account. So most are forced to strictly be unidirectional traders. However, these traders can still make money. And the thing is, Forex traders can also do this as well by focusing on being a unidirectional trader, meaning that all you're going to do is just buy currencies. So, the number one reason to consider being a unidirectional trader is that this is much easier. You're only trading one candle range theory pattern instead of two. Instead of going long and short, just go long. Okay, so you don't need to master both sides of the market. You just pick one. All right, going long, and preferably ones that aligns with strength, and then you could just build consistency faster. So this is the long candle range theory pattern. We have candle one, candle two, and candle three. We are only trading candle three after candle two already appears and is closed. Okay, so this can be traded on the daily, weekly, monthly. It doesn't really matter because remember that the candle range theory is fractal, meaning that it can display itself on any time frame. But obviously, you want to trade ranges that are worth it, be they on the weekly, the daily, the 8 hour, or 4 hour. Okay, I wouldn't go bother going below 4 hour. That's just me. But you can also look for alignment from a higher time frame to a lower time frame. It's up to you. But your focus is all I'm going to do is just buy candle range theory setups going long, and that's it. You just don't worry about shorts. Just get rid of it. Okay. So let's look at some real examples here. So this is the weekly chart. The arrows are simply pointing at candle twos to make them easier to see. At the same time, though, let's remember that candle three plays out after candle two. So this is candle one, candle two, and then a couple of shorter candle three and four there. Here's a candle two right here, candle two here, which leads to a very strong candle three and candle four on the weekly. Candle two right here, which sweeps this low, and then candle three right here. Here's another candle two, sweeps below this low, closes right at it, and then candle three right here, this green one. Okay, so those are weekly. Weekly candle twos are rare. These are the daily chart. You'll see these more often. So again, you can, if you want to pause this and just see it for yourself, candle one, two, three, and so on. All the green arrows here point to the candle twos, right? And then on the 8 hour chart, these will be the most frequent. But again, you can also see some that may not work out as well, but these are going to be more frequent. So, one, two, three, et cetera, et cetera. So green arrows are pointing to them. So let's look at a couple of A plus setups on one on the daily. A very high conviction play will be where you have candle two, which sweeps a prior candle low. If it can sweep two candles lows and close inside of it is ideal, but it's still a three candle pattern, one, two, and then we're trading candle three right here. So let's look at the 5 minute chart as well. If candle two can make the low of the week, that's even better. But this is where our price action is going to unfold right here on this large green candle. And this is candle three right here. I don't know if this was news driven or what, but I mean, price just exploded up to the upside, but we can anticipate this move because candles one and two already played out. So you can also use fair value gaps as confirmation to trend direction. So this is the same chart, just using a confirmation for fair value gaps. This one uses equal highs. Whoops, let me go back. This one uses equal lows and also sweeps. These blue lines are the sweeps, and equal lows here using the mark levels indicator, right? So here's one more example on the 8 hour chart. So same basic premise where you have candle one, two. Well, this is candle one here, this green one, candle two, and then candle three and four, right? So we're going to take a look at candle three and candle four on the 5 minute chart. So first, candle three. You could add an entry right here at 7 p.m. off of these equal lows right here. As long as the equal lows hold, then the trade is valid. So the price just rose 60 pips. So that would have been a great trade. And then candle four from the daily open, these equal lows are holding. Entry could have been right there. Not sure what time that was, but this price exploded 163 pips to the upside. All right. Again, just focusing on buys, not worrying on shorts. So in conclusion, if you just buy strong candle three and candle four setups, you can make your trading much easier. There are stock traders who also only short the market as well. They're called short sellers. So if you want that to be an option for you, just short. You just do everything you saw in this video in reverse. Okay. So candle twos that do sweep levels can be great. You can check out the deep study on CRT price action for that. just go to the playlist and on this channel and you'll see it. And just always remember that risk management is number one. So if nothing else, just remember that if you buy CRT setups, you can make your trading much easier. So something to consider. I appreciate you watching. Thanks for your time and attention. Have a great rest of your day. Take care.